what I need to do is quickly introduce what is resistance and support, and I'll do that real quickly. So check this out. Another way we look at charts for pulling the trigger and exact timing, by the way, we already started switching from monthly to weekly to daily candles, and that's the hint. You also can look at multiple time frames to see if indicators line up for every time frame. Now, they don't have to be all perfect because you're going to overanalyze and talk yourself out of every single trade. But this is what we're talking about when we're looking at resistance and support. Okay, so here's a basic chart. This is actually a gold chart, GC. And this was September 2015. So it doesn't matter. It's just for lesson purposes. So here you can see resistance and support. It's just basically like our same thing as our ceiling and floor. Remember the house? It likes to stay within that range. So the resistance is represented by a red line and the support is represented by a green line. And you can have them moving upward, downward, or sideways. Okay, you can have resistance and support. They create channels or zones. Okay, you can also think of it as they create floors. Okay, so another way to think of them is, remember how we had the house, right? And what we had was a roof. So what we're looking at is there's the resistance and then there's the support. Okay. Now, another thing you could do is think of it as a high rise. Okay. So what you might think of it as is you can have a floor and then you can have another floor and then you can have another floor. So we got a high rise here. And each floor represents its own zone. So, you know, often the price, it'll stay within one particular zone, okay? And it'll have a hard time to break out of it. But when it does finally break out of it, right? It doesn't mean it'll always stay within the range. When it eventually breaks out, just like it did here, it'll have usually a violent move. Why is that? Because it's broken free. That's why they call it a breakout of the zone, breakout of the range. They call it a breakout or a breakdown, depending on if it's up or down. So a breakdown would be here. So basically, now sometimes you'll have a retest and then it moves higher. Okay. I got to mention as a disclaimer, there could be a fake out. That's just something banks use to trigger stop losses up here, because a lot of people use a stop loss, but we're going to leave that for a different lesson. And then they'll crash the price just to make as many people as possible lose money. But outside of that, just want you to think resistance and support. The reason this will retest and go up is because you got this floor over here of the high rise, and that'll act as a new resistance and support. Okay. And when that breaks out, it'll stay within that range because of this floor. Okay, so keep that in mind as we continue the lesson. Okay, so now what we got is, we've got also this where, let's clear these lines so we're not confusing. Okay, so what we got is another resistance support. Where do you see it? Now they can be up, down, trending, or they can be wider. And what I do when I draw them, just to make sure that I drew them correctly, is you'll draw a line in the middle. And why is that? We've got the resistance. Why? Because on the resistance, how many times did the price touch the resistance? Like once, twice, 3 times. How many times did the line touch the support? Once, maybe twice, 3 times. How many times did the line touch the middle yellow line? Once, twice, 3 times, 4, 5, 6, 7 times. So which one wins? How many times did the price touch the red, green, or yellow line? Which one was touched the most times? It was the yellow line in the middle. So the price likes to revert back to the mean. Okay? So what that means, there's the pun for the day, is that you got your middle line, and you can draw a middle line of the middle line, and then the middle line of the middle line to help you identify zones or floors where the price will like to stay within. And you've got more significant floors and less significant floors. That's why I'm representing this by dotted lines. Now, all you're doing is you're looking at a chart back in history to try to find where was their previous peak and where was the major bottom in the past. That will help you pick out where to draw your green and red resistance and support lines. And now, what do you do once you've identified those levels? How does it actually help you? How can that help you decide what will happen next? So let's take a look at the same chart again. I'm going to pull the same lines back up. And now I want you to see this. This is what most people do. Most people, they'll look at a chart. With the naked eye, I can see these lines already, which you can start doing too when you practice this. And then you're going to see most people, they'll just buy it at a random time, whenever they feel like it, right now usually, and not have a target for where they want to enter or exit to the upside or exit to the downside. But this is where I'm going to introduce a concept where you can actually control, make $2 or lose $1 whenever you're right or wrong. Okay? So, in other words, okay, so check this out. We can go up $2 or down $2. Does that sound like a smart proposition? You might as well go to the casino. Bet $100, you either double it to 200 or it goes to zero. Okay? But what can't you do at the casino is this. You can't buy down here based on where you drew the lines of support and resistance and see I can lose $1 or I can make $7. Does that sound like a better proposition? Make potentially $7 if you're right. It's like if I bet you on that sporting event that soccer team will win, and if they win, you pay me $7. If they lose, I only pay you $1. You're going to be doing well over the long term just by sticking to that kind of a ratio, regardless of what happens. Okay, if there's a 50-50 chance. So, another thing you can do is, let me ask you a question. Supposing we bought down there and we only risked losing $1 to make $7. How long would you hold on to that trade to the upside? Remember, over here, we did not want to be buying because at that point, it was either going to go up $2 or down $2. So it wasn't smart to buy at that moment. So if you're not going to buy at that moment, why would you keep owning it at that moment? It's the same thing as buying it there, potentially. Okay? Unless you're using a certain stop loss strategy, which is why you're going to need to come onto our workshop when we talk about stop losses. Okay? And that's why this is a great community we have with several Asian investors group, because you're actually learning how to protect your money and not just randomly buy stuff because someone commented that is a good timing to buy it. You're going to be able to draw charts. You're going to be able to identify where it can go up $3 for every $1 you lose. And that's still a winning proposition. You don't need to go up $7 to lose $1. So that's what this would look like. You're still making triple what you're potentially going to lose if you're wrong. And it doesn't matter if you're wrong now. Next time, if you're right, you're going to still make more than the losses you had in the past. So combined. So here we can actually get out before other unintelligent and rookie traders are getting in randomly. And we already locked in $3 of profit while everyone else is just getting in to start gambling. Okay? So there's a big difference. Markets are not gambling. It is simply not knowing what you're doing is gambling. Like driving on the highway blindfolded. We're taking off the blindfold. We're showing you how to look at the economy, look at the stock fundamentals, and then look at charts for when to pull the trigger. And then within looking at indicators, you can look at the same indicator two different ways. You can also look at similar products, silver and gold and oil, different currencies to each other, different stocks to each other on the same chart. And then finally, we can do portfolio management with these resistance and support levels. So here, where would you sell? Because we can make money in both directions, up or down. So where would you sell? Now that you've drawn a resistance support, you can see where it's less risky to sell and profit to the downward direction. Here, we're only going to lose $1 if the price goes up. and we can make how much to the downside. So who can type in the chat, where would you put your target now? If you're losing $1 if it goes up, how much would you want to make if it goes down? And there's no right or wrong answer. Some people will say it'll go all the way down here to this green line. That's fine, and it can happen, right? But it's got a higher probability to stop on the way here at the yellow line. So I'm going to go ahead and draw that and say, look, I'm still making $3 to the downside while potentially losing $1 to the upside. More importantly, I made that decision before entering the trade, because I need to see, is it even possible? For example, on this exact trade, would I have been buying? Well, I would look. We just had a resistance there. So basically, I'm saying I can go up $1 or down 3. So that doesn't make sense to go to the upside anymore. If my intention was I still want to make $3 or lose $1, then I would be basically saying this. I believe that this could go up, 1, 2, and 3. But the problem is we have this line in the way, which is not going to be an easy trade to go all the way up there. So this is not a good trade. And by drawing resistance and support, we can decide we're going to stay out of this to the upside. In fact, it is a good trade to the downside. We can make potentially more there. And I made the line yellow because it shows we're even just reverting back to the mean, which it did 7 times, remember, not just twice or 3 times. So it does have that tendency. So that's a little bit about resistance and support. All right. And let's go now back to our chart we were on and see what we saw when it came to the actual chart we were looking at. So going back to here, do you see on Tesla's stock chart a resistance and support? And it could be sideways, or it could be higher or lower, upward trending, downward trending, sideways trending. You can see I have 2. We have a sideways trending channel, and technically I should have made the top one red and the bottom one green, and the top one red and the bottom one green. I will do that in the future. I just wanted to keep it for myself. I was thinking I'm the only one that's going to be looking at this chart to see where are we in the range. And I'm able to actually overlap 2 trending channels without being confusing by keeping the entire trending channel the same color. Now you know why I have 4 lines. I got the middle line and the middle line of the middle line. Okay, so what we saw was that Tesla was all-time highs, hugging this resistance and having a tough time to break out of it. However, it did break above it. Okay, if you look at this green line here, I'll zoom in. It broke above the red line, and then it retested the red line, and now that floor, like the high rise, the ceiling became the floor of the next level, and it just released even higher. Okay. Also, if I go back to the daily candles, you can see the green channel. We were all along the support, and it kept respecting the support line, even here, where it had to make a crucial decision where it has to break out of one of the channels now. Because if I continue drawing this green line up, okay, what we're going to find is that the green line will go higher and the red line will continue going sideways. And finally, we're going to be in this area where it has to break out of one of them. It'll either be below the green line or above the red line. And one of them would be broken for sure. So we were at the crucial moment of timing, and it decided to not go back down and stay within this channel. It decided instead to win by respecting this one. So congratulations, Tesla. You created a very good technical chart for yourself. Congratulations to the bulls. You do have this support still intact. It is already at the first quarter line and still has room for this halfway line. So I cannot at this point safely say that this stock is doomed, especially at all-time highs where there's no previous history to compare it to find levels where it can stop. it has a lot of freedom and movement possibility to go higher.